Welcome to the Crypto and Blockchain Talk.
Hello.
Hey.
Guten Tag.
Aloha.
Hola. Shalom.
Hello.
Namaste.
Ni hao.
Privet.
Hello.
Salut. Yassas.
Salve.
Ciao.
Bonjour. Our podcast talks about the latest trends in the worlds of cryptocurrencies and the blockchain.
Hello, everyone, and welcome to this week's edition of Crypto and Blockchain Talk. And with me this week again, I have none other than the most fantastic Rob Levy of Hero. That's HXRO.io, Hero.io. Welcome, Rob, to this week's podcast.
Thanks for having me. It's such a pleasure to be on with you.
Oh, man, the pleasure is seriously all mine. So, look, it's been, I don't even know. I think Bitcoin's right now at 47, right? And a lot of this rise does have to be attributed to the fact that Tesla on Monday said that it was buying $1.5 billion worth of Bitcoin, which basically he was saying he was going to do for some time. He even went on. There was some kind of tweeting happening where he was talking to some other people asking how he could actually do this. But this was expected that he was going to make this move, and he did. He put his money where his mouth is. Now, as we already said, Bitcoin's price was already on a meteoric rise. And then after this announcement, the prices just went a little bit more ballistic, and it went somewhere near 45,000 because we recorded somewhere soon after.
Yep.
Now, one of those key decisions, because they made two decisions really. One of them was to, first of all, invest the 1.5 billion into Bitcoin, and the other decision was to also take Bitcoin as a payment method for their electric vehicles and for any other products that they apparently have in their portfolio. After this, the question arose, and there has been a flurry of articles out there whether or not this decision was the right one, if what he did is a prudent use of capital. And the Financial Times in London came out with a piece, and the title of their piece is Tesla's Bitcoin bet is unlikely to have many corporate copycats. But then you also had other publications who were saying that they think what he's doing is a brave, bold new movement, almost very Star Trek-like in the way that they've said they support his move and they think it's definitely the wave of the future. And then there was like a middleman kind of argument going on in some of these articles where people were saying other companies do this. It's going to derail the stock market. Now, one of the quotes, which I'm going to take from one of the anti-articles, is from a gentleman named Christopher Schwartz, who's the Associate Professor of Finance and the Faculty Director for the Center of Investment and Wealth Management at University of California at Irvine. Now, he is a foremost expert, and he said that he thinks it's an awful strategy on many, many levels. He didn't say it was bad. Rob, he used the word awful. And then he went on to say, in essence, this is like creating a currency risk since none of Tesla's suppliers are paid in Bitcoin. So I want to start there before we go into the other comments and I start taking the positions to debate this. Do you think Christopher Schwartz is correct?
I think in theory, Christopher Schwartz is correct. You are creating currency risk by converting dollars into Bitcoin. But what he's not seeing, which the other people are seeing and feeling, is that they already have a tremendous amount of currency risk by keeping almost all of their treasury in dollar-denominated assets or dollars itself. So, yeah, of course it creates currency risk. And that currency risk could be that Bitcoin goes down to $20,000 or $10,000, but Bitcoin can also go to $75,000, $100,000, $200,000. And he while he's right that, yes, it's creating currency risk, and it is risk that most corporate treasurers could indeed manage. There's plenty of instruments out there that make it simple to manage this risk, but the move itself is a move to manage their currency risk. It's just that the risk is all in the US dollar and fiat currencies. It's just the US dollar happens to be the reserve currency of all the sovereign currencies. So yeah, I think in theory he's correct. It's creating risk. I mean, the numbers change dramatically every day for Bitcoin. So the balance sheet is going to change, but it's risk that is being hedged out against the dollar and fiat. So he's right. He's right in one respect, and I don't think he's looking at it on the other side. But what he's saying is typically the corporate treasurer is supposed to manage currency risk across, if it's a multinational, they've got suppliers in China and Vietnam and Germany, so they're using US dollars. They're maybe making sales where they're collecting different currencies from other places. And what he's saying is, well, you're not collecting any Bitcoin anywhere. You don't really have any risk to that, so it doesn't make sense for you to own it. Well, he's right in a sense, but their strategy is different. They're trying to hedge their overall dollar and fiat risk.
Just to still go on the side of naysaying, Jerry Klein, who's a managing director at Treasury Partners, which is an investment management firm in New York, and you probably know them, he said, which is along the same vein, I don't think there's a case to be made for investing corporate cash in a risky asset like Bitcoin, where they can experience significant declines, because we all know that it's a very volatile market. And of course, like you already said, no one knows. It can totally moon to 100,000. It could crash to zero if some whale somewhere wanted to try to mess around with some of the cryptocurrencies out there who are rumored to be linked to the ballooning price of Bitcoin. I mean, we don't know. We don't know really what those circumstances will be in the future. You could say that about the stock market, but Tesla put almost 8% of its reserves into Bitcoin. Now, if Apple, Microsoft, Facebook, Twitter, and Google were to do the same, this would translate into about another $7 billion of investment into Bitcoin.
Yeah.
And this is less than 1% of the total current worth of the Bitcoin market. But it's not so much about the fact that Tesla's doing it. It's about the signal that it's sending to other companies. Because obviously, by Tesla doing what they did, they're triggering a bull run, which we see before our very eyes. Do you think that this is, first of all, going to be the start of some kind of bull run where we will see the Apples and Microsofts and Facebooks, Twitters, and Googles of this world say, we want a piece of this?
I do. I think we're going to see more and more corporate treasurers. We're going to see more and more people, even like you and me. We're going to see family offices, high net worth individuals. We're going to see private companies, public. I think we are going to see people that understand economics, they understand risk, and they are going to be putting a percentage. I mean, we're talking about a small percentage. We're not talking about everything. You don't have to go, Sailor Moon Boy and put the whole treasury into it and then raise extra money through a debt offering to buy more Bitcoin. I think he's brilliant. I think it's going to work. It's been working for him. But I do think we're going to see other big names doing it. I think you'll probably see it sooner than later. They'll be trickling out. And part of the reason is that there is a significant amount of excess cash out there. I mean, you look at companies like Apple, right? They've got, $180 billion of cash that they're sitting on. And then you see that they're also using the corporate debt market because rates are so low. They're just issuing more debt. They're borrowing more money because rates are so low that they can get a higher return on that money. Apple doesn't need to borrow any more money, but they're doing it because the system is such that there is excess liquidity out there from central banks globally. And there is real risk that the value of those treasuries, as the central banks print more money, they flood the streets with liquidity, that there will be debasement in fiat currencies, that you cannot just create more money and think that there won't be any consequences. And I think more and more people are seeing the last 10 years, and this is the lowest that interest rates have been for the longest. They see that the banks can't really get out of this policy when they've tried to taper it off. There's been, what they call the taper tantrum in the market. The market doesn't like it. We're in no position to unwind that policy. So more and more corporate treasurers, more and more economists, more and more professional money managers, they say it's going to come to a time where you're going to be looked at as being crazy to not hedge a portion of your dollars or other fiat currency into Bitcoin. And I think that's becoming more and more clear every day. I think the corporate treasury movement we've seen of late is just the greatest example of true adoption, mainstream adoption at the highest level of finance. We're talking about some of the most prominent publicly held companies in the USA. I mean, that's real. That's adoption. That's a use case for Bitcoin. And we're seeing it, and it's not going away. It is only going to increase. And whether you get the real, those prime time names like Apple, I mean, Tesla's prime, to me, it's about as prime time as it gets. But to see an Apple, to see a Microsoft, it would be really fabulous. I don't know if that's going to happen. I do think we're going to see a whole lot more companies from no names to big names that get involved in this strategy, because I think it's prudent and logical risk management strategy.
It's quite interesting, this whole risk management strategy, because it has a lot of repercussions. And some of these, they're so significant. And let me explain. Tesla's 8% allocation has probably already gone up to like 12% now. So their 8% is now 12% because what they did to the market when they made that investment and when they made the investment and the announcement. So they've already made money on just making the movement. Yeah. And, there's crypto analysts out there who, for the longest time, including, it's like summoning the devil's name, but like John McAfee, who said he would eat his own private parts if Bitcoin wasn't $1 million by the end of, I think it was 2018. But, but crypto analysts, do you remember that?
Yep.
Okay. And, there are crypto analysts right now saying that by the end of 2021, this year, that the price can basically go to $100,000. And some have even said in some articles I've read, $200,000. Now, a rise like this would obviously drive up the value of Bitcoin on the corporate balance sheets to multiples that are just insane, which of course has this effect on company share prices. Yep. Now, Tesla's share price after the announcement. So Tesla's share price on the day of the announcement, it went up by a couple of percentage points. But you see, if we look at MicroStrategy, their share price has totally ballooned after they made their initial investment into Bitcoin. Tesla is by no means one of the first people to have done this. And of course, one of the first people in this space was Overstock, e-commerce site. They only have like a couple million in Bitcoin. I say they only have I've got so much. Even though they only have a couple million in Bitcoin, there are other people who have come into this space way before Tesla. I mean, they're not exactly the trailblazers here, but MicroStrategy stock is up more than 700% since August, right? So how is this going to then play out on the stock market? Can you imagine then if more companies do this investment and get this uplift? All you have to do then is watch and see what companies are doing in the crypto sphere and then go straight to New York Stock Exchange or to whatever stock exchange of choice and that they're listed on and then invest. I mean, wouldn't that be the strategy?
It becomes reflexive. Yep, it definitely can create a positive feedback loop for those companies. But let's just throw a caveat out there. When the price is going up, right? I mean, since the whole Michael Saylor MicroStrategy announcement, the price has gone from about 15,000, 17,000 up to 47,000. So we've seen Bitcoin's price more than double, almost triple, and they've been riding the tails of a bull market. Now, believe me, there are two sides to every market. It's never only green candles and up days. So the thing that is also going to happen is that when you see pullbacks, when markets get exhausted and you see price come back down and retrace, you're going to see some red down days for those companies as well. And I think one of the most exciting things and one of the most interesting things is going to be, okay, corporate treasurers, have you ever stomached volatility like the Bitcoin market before? Because it goes up and it goes down. So trading's the easiest game when it quickly goes in your favor. But there's going to be down days, right? There's bull markets, there's bear markets, it ebbs, it flows. So we really have to watch how not only the public acts with these stocks, because when you get people rushing into things, everyone has a different time horizon. Everyone has a different risk threshold. And when you see people start heading to the exits because it looks like, oh, this run might be over, I think it's going to take a breather for a while, you start to see sellers and you see red candles and down days. And these treasurers are going to have to stomach the volatility. The main thing is, which is what I hear all of the big corporate buyers of Bitcoin, is this is a long-term strategy. Short-term, it's very difficult to time markets. Very, very difficult. This is a long-term strategy. And as long as you keep that in mind, then it makes it easier to stomach the noise in the short term, the volatility. But this is going to, I believe, really continue. And the interesting thing is going to be when the bull market takes a pause and we see that what was this reflexive, well, buying means number goes up, which means the stock goes up, which means Bitcoin. So then those stocks will just be a proxy for Bitcoin in the end. And they're kind of serving as that right now. There is no ETF for people to invest in the US. So some of these stocks with the big Bitcoin treasuries, they're kind of acting as an ETF of sorts.
Do you really think it's acting like an ETF?
Of course. It's got the beta. I mean, it's got MicroStrategy's been, as you pointed out, 700% increase. It's actually got a higher than 1 beta. It's moving more than the price of Bitcoin. It's like a levered ETF for Bitcoin.
That's interesting. That's really interesting.
Yeah, you get all the benefits of what people want in an ETF, right? It's being able to buy it in your Charles Schwab account or in your brokerage account. You're getting all the safety of doing it on the national exchange. You don't have to worry about losing your password or custodying it, anything like that. You get all the tax benefits, low fees, and it's moving with the price. That is a synthetic ETF to me. I think this is not just me. This is people who are in the markets every day who are seeing this. It's exactly what you pointed out. These stocks are rallying. The ones who make the call to put their cash, some of their cash into Bitcoin, well, now their business is actually, if Bitcoin goes up 5x, they're making more money. Like their treasury, the book value of that entity is higher. So yes, the value of the stock should go higher. So for the MicroStrategies of the world who really, they put the whole treasury in it, then yeah, their stock is going to move more and more like Bitcoin every day.
I mean, I can see how you're making this pseudo basket of securities by just looking at the market and seeing who is investing in crypto.
That's what it is. I think this is going to drive that big question of exchange traded products, the big ETF we've been waiting for. I think it is extremely clear to the SEC and to other regulators in the US that this is how these stocks are behaving. Are you going to give us a regular ETF, or are you going to send people into a riskier investment choice, which is these companies that are holding Bitcoin in their treasury?
The regulators, and not just in the United States, but around the world, they must be looking at this and wondering what they're going to do next. What do you think that is, Rob?
I think they are probably feeling behind the 8 ball because they've stalled. They haven't taken it seriously. They misinterpreted how this financial marketplace would work. It's kind of like in Jurassic Park when they say life finds a way. There wasn't supposed to be a mating of the dinosaurs on that park. They were all supposed to be female. How does it happen? And like things evolve, right? So we're watching in real time the evolution of Bitcoin, and now it's kind of a no turning back moment. When you've got these companies, Tesla is just a true market leader. period, in industry right now. I mean, you can't deny it. So you're seeing major entities at the highest level make these decisions, and they're taking Bitcoin very seriously, and they're putting $1.5 billion into it. They're putting $1 billion here, $1.5 billion there. It's not going anywhere, and they need to get much more serious about it much more quickly. So I think that's really the sign here. That's why, to me, the true adoption, these corporate treasuries in the U.S. publicly held, which is, looked up as, the leader in finance globally, they're adopting Bitcoin right before our eyes. And that, to me, is better than this move to $50,000. It's the fact that they're actually using it, and they're making the point to everybody else that this isn't crazy. And it's actually going to be crazy if you don't take this more seriously very soon.
Around the world, there's very little real-time regulation for cryptocurrencies. It's slowly forming in many places. China is one place that definitely has gone out there, and of course they have their own CBDC, which is a central bank digital currency. Other countries are doing also the same. So they're obviously a little bit more advanced because they have some rules and regulations which are formed around their own digital fiat. Now, the United States hasn't really done much. There's a lot of lip service. Folks, we have a host of podcasts about regulations in the United States. There's a ton of them. Please just scroll down on the cryptoandblockchaintalk.com site and you will find all of them, where I have spoken to a number of experts within the legal system. And we always come to the same conclusion. And that conclusion is it's a lot of talk shop, but no real movement to do anything, to the point that one agency didn't know what the other agency was doing. They didn't know that there was like 2 digital dollar think tanks being set up at the same time, but one didn't know about the other. It's an administrative mess, what's going on, in my opinion, from all this work that we've done in the past on these podcasts and talking about this. Now, they're going to have to come out with some rules one day, because what's going to stop a company from converting all of their treasury into cryptocurrencies, into Bitcoin? What's going to stop that? There's no rules enforced right now that would stop a company from doing that. And even though we can argue, of course, that would be a stupid strategy, it's still a strategy a company can undertake. There really is nothing there. More importantly, along the lines of Quadriga CX, let's just say that Tesla employed Inspector Doofy to look after their keys. What's going to stop one of these companies one day? Because this is a little bit different. It's a different animal than having bank accounts and traceable fiat. I've been well educated by Carmen Siegenbein and Craig Duploy, 2 experts in the world on how you can hide any kind of currency commodity. I get it. There have been billion-dollar scams. Pincoin, poof, 6 people, puff of smoke, no one's ever seen them again. 660 million, buys a lot of cosmetic surgery. So what's to stop a company from totally investing all of their treasury into a cryptocurrency because they think that they're going to totally moon everything and the value of everything they have is going to balloon? And B, there's still keys. What's to stop someone from running off with that or dying with it? I mean, look at the case that's going on in Germany right now. There's a guy under arrest. $60 million is being kept by the police. The guy refuses to give the password. The police will never get it. And apparently this guy's never going to get his cold wallet back. But the whole point is that nobody can touch it.
Yeah. The first thing I have to say is whether it's Bitcoin, whether it's euros, yen, cash, Argentinian dollars, whatever it is, what's to stop corporate treasurers from making bad decisions in general? Because corporate executives often make bad decisions. And the one main thing that keeps corporate executives in check, especially the publicly held ones, are the shareholders and the board of directors. And the shareholders make it very clear when they don't like how a company's executives are behaving. They sell the stock, right? And shareholders make it abundantly clear when they really like what the corporate executives are doing. They can't get enough of the stock. They buy it up. So, there are treasurers who can do the things you talked about, squander money and it gets done in everyday business practices and decisions that are made. I know, coming from the agricultural options and derivative space, there were, people have to manage inventory, manage balance sheets across the US, Brazil, China, Argentina, Russia, the big grain traders. And there are big, big mistakes that can be made just managing your currency risk between those, because all of those currencies move a lot. Like the Brazilian real, that moves like Bitcoin does. It's volatile, and it's lost a tremendous amount of value to the US dollar. So people are making those decisions, and you have to believe in the executives. So I don't think there should be anything that will say to Michael Saylor of MicroStrategy, you can't put your whole treasury in Bitcoin. If his shareholders and board of directors have faith in him and they want it to happen, it should be able to happen. Now, they do need to have the best practices with respect to securing their funds, which I would imagine they do, and they're going to be held responsible for it. But I don't think anyone should be able to tell people how much Bitcoin they should be able to hold in their treasury. The one thing that the governments care about the most, especially in the United States, are their tax dollars. Bottom line is, you're going to be buying and trading crypto, you're going to be paying the tax man. And I don't disagree. I mean, you live in countries that fund themselves with taxes. So if you don't want to live there, then move. And that's kind of the bottom line. And if you're gonna play in crypto, you got to understand that the tax man cometh. And don't try to act like just because your wallet is not at the local bank or the national bank, which the government could get documents and all this stuff, don't think that gives you a free pass, that you all of a sudden don't have to pay taxes if you're buying and selling Bitcoin and making money. Like in the US, taxes are the biggest thing. I think elsewhere, like China and Korea and other areas, it's a capital control issue. China really doesn't like their money leaving the mainland, and that's their biggest risk for them. So that's why they're so kind of serious about it, and that's why they're moving quicker to their CBDC. In the US, digital dollar doesn't really mean as much here because we're less worried.
It means nothing. Yeah.
They're slow. They don't care. And that's part of the benefit of being the US dollar reserve currency of all fiat currencies, but that doesn't last forever either. But they're not worried about it because they're not worried about capital control. They're more worried about the taxes.
Well, you're leading me to a beautiful segue, which is, what about the taxes? I mean, look, we're talking about cryptocurrencies. It is very easy to hide your cryptocurrency, especially if you're going to start transacting it. I mean, not every company is going to be honest. It's a little bit harder, I think, to cheat the system when people are paying in credit cards and cash. Because if someone's paying you for Tesla in Bitcoin, I'm not being funny, but you can hide that.
How? You got the Tesla. I would imagine they're still going to do the same kind of documentation when you buy the car, right? I don't really make purchases in Bitcoin. I just want to hold it. I don't want to be the pizza guy in 10 years. I don't want to buy the $100,000 blender, the $10 million Papa John's pizza. Are you kidding me? I'm not going to be that guy. I think we're going higher. I'm not spending it. But you would think you go to Tesla and you buy with Bitcoin, they're still going to give you you're still going to have to give them your information. You're going to have to show them your driver's license. All this stuff, the bill of sale, it's all going to be on file with them, I would imagine. I don't think anyone at that level can just make sales and not have any documentation. The other thing is, any Bitcoin wallets and places where you keep Bitcoin, it's all on the blockchain. It is pretty transparent. If you're going to try to move Bitcoin in and out of a wallet, they can track what's been in and out of that wallet, where it's come from. They can look at the next wallets, where it went. If you ever try to then do anything from that wallet and convert it to dollars or do something, it's all leaving a digital footprint. So I don't think it's that easy to hide things in Bitcoin. And quite frankly, I think it's the opposite. I think the government is really, really thrilled that there is a public and open ledger where they can put their bean counters on and start tracking everything.
You see, even if I did know how it can be done, there's no way I would tell people how this can be done. But I know because there are people out there who do something called money laundering and they do all kinds of crazy things with crypto. I do know for complete fact that you can hide crypto. Again, those two guys I mentioned before, they know all of that because their jobs are to work with Interpol and find this money. And even they've told me on the podcast, there are just times where you just cannot track it. It's just gone.
Yep.
And it's not from want or lack of trying. It's just because it's gone. And I really doubt that there's someone in the IRS whose job it is to go and count how many Teslas or any product from any company is out on the street. I mean, can you imagine if you start taking crypto and it's like light bulbs you deal with? I mean, right. How's that going to happen, really? And I don't think that any country is tied enough in terms of their departments where one hand is really talking to the other. I don't think the DVLA or the DMV, the DVLA in the United States or the DMV in the United Kingdom or whatever the other departments are called around the world, I don't think any of these departments are tied into the tax system where those poor suckers are already working 24/7 a day trying to hunt down people who are doing really bad things. Yeah. I mean, this is another layer of complication in terms of finding and prosecuting. Now, I know, and I do know, because I do read the news, that yes, there's been people who have been prosecuted for hiding their crypto. And there's a really good reason why they were prosecuted. All it takes is someone who knows what they're doing to be in the position. And I'm telling you, those taxes are not going to get filed. And the case I'm alluding to is a Microsoft employee who was sentenced to 9 years in the first ever U.S. Bitcoin case involving tax fraud. And the guy was from the Ukraine. He wasn't very smart about it. Everyone can look it up on the internet. But that's a guy. If you're a company, and especially somebody like Elon Musk.
What's going on with all of the cash money that up to this day is, the most used form of payment in criminal activity? I think that cash is still much more difficult to track than crypto. I think, you got your friends, the wizards, the sleuths who are helping Interpol. I think there's more and more really smart guys like that and gals who can work to track this, and they are, like even the U.S. government's hiring Chainalysis and different companies who really know their way around the blockchain to look into it. I think that while there are ways to hide it, and there are smart people on both sides, I still think that in the end, it's very difficult to track illicit action with cash. And I think we're going to see that cash is just going to continue to become outdated and not used. And a lot of the reason would be because of the illicit activity. It's just so much easier to track digital payments. It reminds me of like restaurants. There's every now and then I'll go into a restaurant here and there's still some restaurants that only take cash. And I'm thinking to myself, how does a restaurant in today's day and age only take cash? I get it. There's a credit card fee that they don't want to pay 1.5% or whatever it is per transaction, credit cards. But like, don't you think that the IRS or whoever the taxman is going to take a closer look at all the restaurants out there, all the businesses that only deal in cash? I mean, isn't that like the place to go look for maybe they're not paying their proper tax bill? So there are always going to be examples of ways to skirt the system. But a guy like Elon Musk at Tesla, they're not going to be trying to skirt the system on paying taxes on any cryptocurrency related stuff. There are going to be bad actors in every walk of life. And I think that the ways to track and kind of fight that sort of illicit activity, they're going to be matched kind of one-to-one against, there's going to be some smart people on both sides, and eventually digital payment and crypto will only be the way, whether it's a centralized government crypto or if it's a private crypto, which is not centrally backed or centrally owned.
You've already made it very clear that sitting on piles of cash is going to be to nobody's benefit in a corporate treasury setting, because it's going to get little to no return. It's constantly devalued by central banks and supposed to be about diversifying risk and return. And many people think that this is really where cryptocurrency is going to go, live, and stay. So knowing this and knowing all the risks, we've covered quite a number of risks that companies have to think about, especially their full-time asset managers, who will be the ones who will be ultimately responsible. I'm going to now ask you this last question. If you were the asset manager for one of those other companies that we just talked about, and the big boss came to you and said, hey, Rob, I think we should put 8% of our company's treasury into crypto, what would your response be?
Why so little? I think it makes sense on a number of levels. I think that probably could be a low number. Obviously, it depends on the type of business it is. But I'll tell you what, there are other benefits than just the store of value benefit. Let's talk about just some of what these corporate treasurers deal with in this traditional banking services world. How about closed on the weekends? The flexibility that Bitcoin brings 24/7, 365, lower transaction fees, true liquidity, true flexibility. There are other benefits to holding some reserves in Bitcoin. It's not just the store of value. The store of value is the risk management tool, right? I guess you could say that the risk has never been greater, or at least in the minds of economists and treasurers, the risk has never been greater for the debasement of dollar, the debasement of fiat currency, just because of the policy at hand. I think that's kind of a given. So that is the main point. But the other points are also extremely, extremely valid and represent where traditional financial services are going. I mean, how about the fact that you can lend out your Bitcoin for an easy 10% return right now? You could convert your treasury to Bitcoin. You can lend it out and earn 10%. Where are these people going to earn 10% anywhere else on their money with a risk-free loan? I mean, there are other benefits to this. So it is 8%. Great move. I'm glad you decided to make this move. We've been urging you to make. Let's think about doing more. Call me Sailor Jr., you know?
And by the way, folks, Sailor Jr., he is alluding to the chairman and CEO of MicroStrategy, Michael Saylor. So on that note, Sailor Jr., Rob, I would like to thank you for coming on to Crypto and Blockchain Talk again. It's been a blast.
This is great. It's always great. You've always got great questions. I love the topics. It's just always a pleasure speaking with you.
It really is fun. I'd like to thank everyone for tuning in to this week's Crypto and Blockchain Talk. Please remember to tell your friends and family to download our podcast on a myriad of podcasting platforms. The full list is on cryptoandblockchaintalk.com. In addition, these podcasts, news, music, and more are available 24/7 on Crypto 24 Radio. Also, you can talk to us anytime you want through our normal social media platforms of Facebook, Twitter, and Instagram, but we love to hear from you directly. That is our preferred method of communication, and you can do that easily by emailing us at education@savvydigital.com. That's education@savvy, SAVII digital.com. Again, thank you for tuning in. We know you have a huge choice of who to listen to, and when you give your time to us, we really appreciate it. So please be safe, take care, and goodbye.